Chapter 24, Accounting for Sales Overview. So again here we're just looking from a high level and just trying to conceptually understand the role that bar iron and the role that extracting sales from a point of sale report plays and understanding how important it is. So in latter chapters we're going to get into more detail about specifically how we do this, but for now we're working high level. So in the invoicing section we talked about how our business is based on accurately comparing what is used with what is sold. Recipe writing is how we know what was sold, and it requires interpreting a point of sale report from the audit period. So what I mean from the audit period is if we are auditing, if we're running a inventory cycle for a given week, including 7 days sales, then obviously we need to run the point of sales report for that same 7-day sales period, and we would refer to that as the audit period. The challenge with doing this is that point of sale systems are set up for a specific purpose, and that purpose is to ensure that customers are charged appropriately and so that bartenders know what drinks to make. We're in a little bit different situation because we deal with the aggregated period report. So whereas a bartender sees the drink ticket, which is printed right at the time when the server rings a drink in, we look at an aggregated report which summarizes all of the activity in the bar over a set period of time. In this case it would be 7 days. But when we pull a point of sale report, it summarizes how many times every point of sale button and modifier was pressed, but we don't have the benefit of seeing those individual tickets which were printed when the drinks are rung to the point of sale. So for an example, when a server rings a Jack Daniels on the rocks, typically they're going to do this by pressing the Jack Daniels button and then selecting the on the rocks modifier, and that indicates to pour extra Jack Daniels, since the bartender is going to see that on the rocks printed on the drink ticket below the Jack. However, when we see the summarized report, the period report from 7 days, what we see is how many times the rocks modifier was pressed in total, but we don't know how many times it was pressed indicating an extra half ounce of Jack Daniels and how many times it was pressed to indicate an extra half ounce of other products. So how do we handle that? Because the point is that we're going to have a button press for Jack Daniels. We can assign 1.5 ounces, and then we've got this on the rocks modifier. We know that it's half an ounce, but we don't know which product. So what we do is in the short term we write the recipe for the rocks modifier to be half an ounce of an imaginary product named unknown liquor, and the purpose of this is that so we can correctly account for the volume of product used, with the problem being that it's not possible to identify exactly how much of each product was used. So for example, if the Jack Daniels button was pressed 10 times in the period and each time should have been 1.5 ounces, pretty simple to see that we've should have sold or should have poured 15 ounces of Jack Daniels. However, when we see that modifier was pressed 10 times, we know it's 10 times half an ounce, so 5 ounces, but we don't know how many ounces were Jack Daniels and how many with other things. So by writing to unknown liquor, we correctly account for the volume, but we can't match it up perfectly to the specific product, Jack Daniels. So what we do is in the longer term, we get clients to reprogram their point of sale systems, so it provides us with a more precise record of what was sold. And I'd strongly recommend you at this point to go ahead and read this article. If you click on this link within the document, you'll actually see that this article here, how to maximize your bar's point of sale system, or sorry, how to program it to maximize profits. So read that article. But this issue that we're explaining demonstrates 3 different things. So first one is that knowing what was sold requires interpretation of a typically imperfect record of sales. In this case, the rocks modifier doesn't tell us, tells us volume or amount was sold, but not which specific products. Number 2 thing we figure out is that in cases where there's this gray area in the point of sale, it's usually possible to correctly account for the quantity of product used, in this case the extra half ounces, but it's imperfect since Jack Daniels is going to show missing because we weren't able to assign those half ounces to Jack Daniels, but those half ounces have been assigned to unknown liquors, and so in effect what's going to happen is Jack Daniels will show that it's missing some, because every time we poured a half ounce of Jack Daniels, we can't account for it exactly, but on the product line for unknown liquor, we're going to have all these half ounces rung up, and so there'll be an offset where Jack Daniels will show some missing product, which will be perfectly offset by the amount of Jack Daniels that was run as unknown liquor. Of course, the problem here is that the unknown liquor rings will actually contain half ounces of Jack Daniels and Jameson and Johnny Walker and Well whiskey, so it's not quite as simple as a one-to-one relationship if we only had a single product. And then the third thing is that following best practice, or the correct way of doing things, requires that you have the client make changes to their point of sale setup, and that's challenging because you're not completely in control of that. But in this case, we'd recommend creating a Jack Rocks button so that customers are charged correctly and we can provide the most accurate results possible. So in that case, in addition to having a Jack Daniels button, which indicates a certain amount of a cocktail, 1.5 ounces, we'd actually have a second button which you just press Jack Daniels on the rocks. It would charge more, and that would be a 2-ounce pour for that drink. So instead we'd have a separate button. Rather than ringing the cocktail and then modifying it with the extra thing, we'd have a dedicated button for Jack Daniels on the rocks. And we call the concept one drink, one button, as you'll find out when you read that article. But the point is that a different size drink is not a drink that you then modify. It's a completely different drink. It should be priced differently, and so we have to have the point of sale set up in that way. So while we can accommodate imperfect point of sale setup, in your role as a bar profit consultant, one of the hardest but most important tasks is to affect change in the client's behavior. In this case, to get them to reprogram the point of sale so they make more money. One of our business partnerships is a company named, or is with a company named Serving Success, which provides point of sale systems to bars and restaurants. One of the reasons we particularly like this system, we actually haven't done a lot of work together with them, but I still think that the way they handle this specific situation is one of the cleverest of all the point of sale systems, and there's loads of them, is their clever handling of this situation. So with their system, their reports are very customizable. You just have to mess with some of the settings in the back of house. But in this case, they're able to adjust the report settings so that the report precisely shows how many Jack Daniels on the rocks were sold, rather than how many Jack Daniels were sold plus how many total times the rocks modifier was used. So basically, rather than on the report showing rocks or on the rocks modifier being pressed 20 times, when you turn this setting on, it will say on the rocks Jack Daniels pressed 5 times, on the rocks Jameson pressed 4 times, on the rocks Johnny Walker pressed 8 times. And so in that instance, obviously we know the exact amount and the exact product, and so it solves our problem of not being able to match things up correctly. The reason this treatment is so clever is that it doesn't require the client to reprogram their system. It just requires us to change a setting, which is obviously quick and easy to do. And because it's being handled by point of sale back of house processes. Obviously that's due to the clever design of their system. Unfortunately, most point of sale systems aren't as customizable. They're not as clever in their handling, and so you're left with a choice of dealing with the imperfect sales data, or jumping through the hoops and cajoling your clients and getting over their objections in order to get them to update their system. The point I'm trying to make here is just that we can interpret sales off a point of sale system, but really in the grand scheme of things, typically you're going to have to get more involved with helping clients understand the problems and reprogramming their systems or changing their back of house settings if you want to get the best out of the system, or if they're going to get the best out of the system. And obviously if they're getting the best out of the system, they're more likely to continue using it, keep paying you. That's how we make money. So you'll quickly learn that it's significantly faster and also more rewarding to complete audits for clients when the systems are set up correctly. And because of that fact, it's a lot easier when you don't have all these spurious variances where one thing's been rung as unknown liquor. It just makes the results look so much cleaner, and it makes your analysis process take a lot less time. And so obviously time is money. If you can do an audit quicker, then ultimately it's more profitable. So it's very much worth the extra effort up front to work with a client to get them to make changes in order to ultimately make your business more profitable.